Trading crypto can make me feel two ways. Sometimes I feel on top of the world, like everything I'm doing is just making me all kinds of money. I'm just printing it. And then sometimes I feel hunted. This week was one of those. Typically, it boils down to small mistakes, but that's the point of these videos, where I can discuss the trades I took, why I took them, and why I got wrecked this week trading crypto. All right, so it's the weekend. I go ahead and then chart right away. I try and figure out what I'm going to be looking at long term, if the price is going to be going up or if it's going to be going down, as well as what I think is going to happen in the week. If it's looking like, we're going to have a green week, then I'm going to try and focus on long trades. If it's going bad, then it looks like I'm going to be trying to take short trades. So I'm going to go ahead and get charting, and this is what I do. So when I start a chart for the weekend, what I'm thinking is I want to figure out where the market is going to move. I do that by looking for where a grab on external liquidity would be, and then where it will retrace to try and grab internal liquidity to go and grab a further external liquidity. And I know that sounds super complex, but essentially what it is external liquidity would be above a old high or an old low. So for this example right here, it's actually above this low here, because when people got involved in this move here, they had to set their sell stops in case it were to go back down and they wanted to get out of the trade. They would have to place it somewhere. So therefore they would set it probably underneath this candle right here, where you can see I put a big sell side liquidity. Now when big money wants to get into a trade and get involved, they have to buy from somebody that's willing to sell. So when there's a lot of sell side short stops underneath here, a stop loss set to sell back from these longs, the buyers that want to get in with big money are going to need to get into that pool so that they have people to buy from. So you see right here, we grab that and then respond immediately back up. Now that looks like a reversal to me. So what I see is I see this ranging up, and right now I'm bullish for like not a long-term range, but at least for a while until we get up into this area. Then I'll have to kind of consider and watch the market to see if we grab liquidity and try and go externally back down again here. So right now I'm seeing this go. So my first step is I go ahead and I chart the range. The range of this last swing was right here, and I put a fib on there to try and find midpoint. And this is kind of like a fair value where you're getting the price at a fair value. You're not up in this range of this swing that's saying, you're buying it at a high price, and you're not buying it at a low price down here, which always mark out red and green depending on where we are in this latest swing of, this would be like my weekly, well, more monthly view, because it's going to take a while to get back up here. So right now we are in a premium. Ideally I'd be looking for longs, however that's not always the case. So when I drop it down, I then worked on another chart here, kind of in the short time frame, right, on my daily. You look at this swing, I would do the same here, but we're already past that. You can see right here, if I were to do the same thing as I did with this week's range and do a fib up, here's that fair value. Anything underneath this would be buying at a premium, right? We get low enough where you'd be looking for longs, and then it would go up. Now, up here, it's too high, so we're looking for shorts down, right? So that's essentially what I'm doing here. I'm again marking out a fair value on price, an area where I'd be looking for shorts, and then an area where I'd be looking for longs. Now, going to that external liquidity to internal liquidity range, kind of where I see it going right now on the short and the weekly, what I'm seeing is that we're trending up, right? So we have the price coming down into a range. It can pick up internal liquidity, and then expanding above the last range higher, making a new high, getting external liquidity. So we reached up, grabbed external liquidity, and now I'm going to believe that I think price is going to go back down into this range. So you'll see I was taking a lot of shorts this week. Now, even though I'm long, I ideally want to see the price get back here so I can take a long trade that I think will have more upside, a higher probability. However, I still took a lot of shorts in the week. So I think the price is going to go back up to this 25 area before we see another drop, next leg down. However, in order to get up there, I think we're going to have to get more people to sell into a range where big money can get back in and bring it up. So right now, at the beginning of the week, I was looking at shorts. So another thing that I'll do on the weekend is I will go ahead to forexfactory.com and look at their calendar of news releases that are coming out. And the only thing that I really saw is that they did check on the unemployment rate here. As you can see, it was a little bit more than expected. Didn't really affect the market. So another thing that I'll do is I'll come to the Commodity Futures Trading Commission and look at the reports here, the Commitment of Traders report that just shows what hedge funds are doing, where they have their money at the moment. They're required to do this. So I go ahead and look at the financial department, I look at the long format, and I look to see what they're doing with Bitcoin right now. And if you look right now, the Chicago Mercantile Exchange is more long than they are short in the micro and regular Bitcoin. So that's a good display that my bias is probably right in the long term, that they're going to be longing the market. So that's good for Bitcoin. All right, so on Monday, the first trade of the week, what happened is we had what looks like a reversal coming in. We are, in the grand scheme of things, we are in short range. So I should have looked at that and been looking to take a short instead of a long. However, I saw this. I saw all of this liquidity up here, and I thought that the market was going to chase for it. And so what I was looking for was us to kind of stop after taking this external liquidity up here and then get a range down to internal. I was going to make a trade off the internal liquidity, trying to take my profit, my first half of the profit, up above the external around here, and then try and keep a portion in to try and chase this liquidity for, let's see, about 1% trade for the first part of the trade, and then the remainder that I leave on an additional 1.5%. My entry was $500. I leveraged it 10 times, so my position size was $5,000. And I'll just show you how the trade panned out here. So breaking down this trade, I took a loss of $28. This was the first trade of the week. And as I was trending down here to get into the trade, we were around lunch. I mentioned it multiple times, that around 1:30 it's significant. Usually it's called the lunch reversal. That's 1:30 New York time. So I saw this at my advantage that we would possibly swing, but you can see we dropped right through. A big thing I also noticed was that I was over levered. I'm trying to keep my risk to 5%. 5%. And I was, in order to go to where I wanted to have my stop, which was down here, it would have been hit regardless. But I was way too over leveraged, especially when on the long run I'm longing in my red zone that says shorts have higher probability. So this was just kind of a bad trade by me. I think I just wanted to get into a trade and film something for you guys, and it ended up being a loss. However, I did have the right idea. You can see it did come up and take out my target, but wherever I would have set this entry, which was a poor entry in the first place, I was trading off this block here. Wherever I would have put my entry, I would have had my stop here, so it would have been hit regardless. What I could have done better though is I could have continued to follow this trade and seen right here that when we drove down and came back up, that's a sign of a reversal. I should have tried to get back in right here, and I would have caught it and made back my loss at least. So that was the first trade here. So my second trade of the week came in on Tuesday, and how I came to this trade was, yesterday was the trade I was looking for. We ended up getting up here. We ended up dropping through, and as we're dropping through, we start losing momentum. So what I was looking for was this to take external liquidity here and show signs of a reversal back up. And I was looking to get in at some internal liquidity. I thought it would go up past here. That would insinuate that I have a trade, and then come back down. And I was looking for an entry right here at 22772. That's where I set my entry. Again, I did a 10x leverage, which allowed me to only put my stop loss right here, which I should always put my stop loss below the lowest low. That's a kind of a protection point when we're getting reversal. So I over levered myself, and that's essentially how I came to the trade. What I was looking for right here is an external liquidity zone. So I was looking to try and hit here to take half my position size out for a profit. At that point, I would raise my stop loss and then aim for my second target, which is the big source of external liquidity right there. And this is how it played out. So we ended up taking a loss of $29. However, I did manage to get back in my trade. So I saw that we did break it. I figured we'd go up and hit the second target. So I took a risk and took another 10x trade. And this is how it played out. Got in there. And hit the target. So I was trying to plan to put it back into a short, so I actually took profit around here. I was trying to get in a short around this area. I didn't get in, so I ended up losing 29 on the first trade, but on the second trade I made 75 bucks. Alright, so as you can see in that last video, I was kind of tracking Bitcoin going up. I was looking to take a short up in this range. However, we took external liquidity here and then reversed. So that's a sign that we're probably dropping down after we go seek internal liquidity up here. I tracked it up there and thought it was going to drop, got greedy, and instead of taking the trade with Bitcoin, I ended up taking the trade with DOT. So I went over to DOT because DOT was just moving. Like if you look at this move here, if you look at this swing, it just got done moving 10%. So in my eyes, I figured, this is going to move a lot quicker down and I'll get a lot bigger of a profit from taking a trade on DOT than I would Bitcoin. So I went ahead and got an entry at 8.345, 8.345, taking a stop just above the latest high, knowing that Bitcoin was going to be going down. So I figured this wouldn't have enough steam to go and take out this high. And have my take profit set down here, and this is the way the trade panned out. This is what I mean earlier when I said that sometimes it feels like you're just getting hunted by the market. You can see here's my stop. If I would have traded Bitcoin, right, I would have placed my stop above here, Wouldn't have gotten hit, would have taken profit. Dot, I put my stop above the old high. It swings up, takes it out, and then proceeds to drop 5%. And so what would have been, a couple $100, $300 on that trade ends up being a loss of 30 for my biggest loss of the week. Again, playing with margins that I shouldn't be putting my stops in areas that are so obvious, I think, is what I learned from this trade. Also, getting greedy on dot, it would have worked out, but again, it's just my stop losses are getting set in bad spots. I'm calling these trades fine though, and so that was my fourth trade of the week there. It's the most unfortunate, annoying one. All right, on Thursday, I think this is the last trade I recorded. I did take more trades in the week that I'll kind of cover briefly. The idea for the trade here is we just came up, had a reversal, took external, looked like a reversal, came down, broke these new lows, and kind of searched for external liquidity here. So I'm looking to take a short. We're in my short range. This is the red graph showing that we're at a premium in cost right now. And we came down, and what I was looking for was it to come back up and grab internal liquidity, which would be around this range right here, where we're only offering sell side liquidity. I put my entry at 233,395 and thought it would go back up, grab the internal, and then search for a lower low. However, I just wanted to make money, so I set a little bit lower because I've been getting burned on my stops all week. So I would have ideally tried to search for this range, 22755. However, I set it here, so this is how the trade worked out. So on this trade, I managed to make $25 real quick. Like I said, I think it did actually end up playing out where it dropped lower. I just wanted to make some money because I was getting burnt on stops. This one felt nice because I had zero drawdown, like at all. It just worked up, got my entry, and just dropped all the way to my target. Now, if I would have held a floater, I think we face a little bit where it went back up before going down and just sweeping the areas where I was looking. There we go. Yep, right there. So I could have made more. Could have made $40 on the trade, but I was just having a frustrating week so far, so I just took the profits. So on Friday, I did continue to trade, but I let you guys down. I didn't record anything live or take any screenshots of when I was going to take the trade. I was testing a new strategy of mine that I thought would work, and I ended up changing my balance to $961. So it didn't really work. I ended up taking like 7 trades. I over traded like crazy. Ended up, I think, taking like all of them like $4, $5 losses. I was trying to find a way to like better my stop loss. Because that was my main takeaway this week. This week, I just had poor stop losses, had an opportunity to cash in on all of my trades. They were essentially all would have worked if I just had my entry a little bit farther back and my stop loss a little bit farther back as well. So my main takeaways is I can keep trying to find the trades the way I am because it's working. However, I just need to either adjust my entry farther back or just get used to more drawdown and adjust my stop loss farther back. So I'm going to stick with the same strategy next week and then hopefully improve using that. If you guys made it through this video all the way, thank you so much. Please hit like or subscribe. I'll be doing this once a week, so hopefully you guys can either learn from my mistakes or learn from stuff that I'm doing well. If you have any questions or you want me to be aware of something, maybe you've got a really good strategy you want me to try out or something like that, leave a comment. And I want to build a community here, guys. So thanks again, and I will see you next week.